to introduce our panelists for this packed panel here. So you can see a bunch of chairs being set up. We have Lucas Swisher, who's general partner at Co2, also a Harvard alum. So maybe I'll ask folks to just come on in as I announce. Feel free to come, Lucas. Good to see you. All right. Next, we have Susana Rojas, who's a partner at Index Ventures. Please give her a warm welcome. We have Kathleen Eistreich, a partner at Pear VC. Give her a round of applause. And I apologize in advance if I butcher anyone's name, including this next one. We have Ambar Bhattacharya from Maverick Ventures, Managing Director. Thank you. Please welcome Elizabeth Weil, Managing Director at Scribble Ventures. Wherever you'd like, but we have Andy McLaughlin, Managing Partner at Encore Capital. We have Matt Vale, Head of VC Partnerships at OpenAI. Welcome, Matt. And then we have our moderator, the gracious Grace Gong. So I will pass it off to Grace to kick off the panel and see you all in a bit.
Hello? Okay, you guys on. Hi, everyone. Welcome to our most stacked, amazing AI investor panel. Every investor actually fight to be on this panel. I had to say no to, we have a really long wait list going on. And congratulations for making it to the top investor list on this panel. To start off the panel, I want to maybe start off with a fun question on what is the last AI tool you've used? Maybe we'll go with Elizabeth.
Oh, it has to be, I got an easy one, GPT-5.
Oh, I have the mic.
See, I listen to directions, and that's why I had to sit in the seat.
I'm a horrible note taker. I find like if I'm typing, I'm not listening. If I'm writing, I'm not listening. So I've become addicted to using a product called Quill that can join.
Me too. Oh my God.
All of the Zoom meetings and provides 10x better notes than I could write myself at the end of it.
Quill versus granola.
We're like a split Quill granola firm. Like some people like one, some like the other. I think at this point I'm just bought into the Quill ecosystem and it has all my data.
Amazing. Actually, shout out to Michael if you're watching this. Michael is the founder of Quill, who's a friend, and he's amazing.
I'm a deep research nut. I love deep research, so I use it every day.
Every day.
You're getting into the generic VC panel. We just installed Quill this morning at our firm, so that'd be that. Notwithstanding that, I'm a big Perplexity user, and so I think they're an OpenAI obviously, but I think just for the sake of variation, a lot of cool products that they've come out with. Comet, I think, is a really cool browser.
We use a lot of, our tooling is built on top of Airtable, and a lot of kind of AI automations built on top of that. So I kind of live in that most days.
I'll say Block It. Schedules all my meetings. It's amazing and conversational.
Nice. Matt, you're going to have to close your ears. Nano Banana. It's the best. This new tool from Google, the image generation tool, is incredible. I feel like the first time my mind is blown using AI was obviously ChatGPT, and then I feel like the second time was Nano Banana. I mean, it's crazy what you can do now.
Amazing. I love the diversity on the panel. Maybe we could start with what is one product that you've recently seen that you find very interesting through all the startups that you encounter every day?
Are we allowed to talk our own book, or is it?
Yeah, we can popcorn. Yeah.
What kind of VC would I be if I wasn't kind of pumping the portfolio? We have I want to call it a new company, but it's actually not a new investment. It's a 2-year-old investment that just came out of stealth about 2 or 3 weeks ago called Anything. And I kind of feel like if you're a VC that doesn't have a text-to-app builder in this year, are you even doing your job? But what they've done is built this incredible one-shot product where you can, with a few prompts, create an app that can be published to the App Store or the Google Play Store. They've kind of modified, they've got an incredibly fine-tuned model on design as well, so it doesn't look like an AI product that comes out the back of it. Yeah, it's phenomenal. I built in an afternoon a tool to ingest emails and board decks from our portfolio, spit out key metrics, and push them into our Airtable. I haven't written a line of code in about 10 years.
I need that. Okay, talking book and not talking book. One on the talking book side. A company called Weaver, which is kind of cursor for design. You know, there's a lot competing in that space, but this team is wild, and I'm very bullish on what they're working on. For any of us can be world-class design code. One of our recent investments in that way out there type of zone of deeper tech is a company called Neuralace, where you think now we're prompting models to tell us tell us things, and this is all through brainwaves. So brainwaves being able to turn to both predicting next thought, but then also turn to words, which I think is just wild. And then one that I passed on, I'm still wildly curious about, is actually a robot. I didn't realize how much drag barnacles on big shipping containers really adds. This robot, all AI robot, cleans those holes, those shipping vehicles or shipping rigs. Wild, and the amount of fuel savings, et cetera. So passed on it, but still think of it.
Is that the one that has a really fantastic name?
Yes. Yes, and it's so fantastic I don't remember what it is.
Just say something like that.
I'll think of it.
Speaking of robots, I have one that's pretty interesting. It's called Tolan's, and it's a AI alien best friend. And so it's kind of a great consumer use case. It's geared towards a younger audience. But the idea is kind of like, remember the Tamagotchis, if I'm pronouncing that properly, like that you would have, and you develop a relationship with them over time. And this is the same kind of idea where it's kind of with you all the time, engaging you in conversation, and it's geared towards like this kind of loneliness epidemic and overwhelm epidemic that we see. And so I think it's a pretty cool tool. You know, you'll talk with it during the day. You can actually turn on video mode and show it, you know, I'm trying to cut a watermelon, like, is there a better way to do this? And chat about whatever you're doing, apparently cutting watermelons. But it'll actually take that feedback, and then at night, it kind of takes all the notes about what you discussed through the previous day, and it starts thinking about like conversation starters for the next day. So it starts kind of building a relationship with folks, and I think it's a pretty cool use case, and it's got a lot of uptake right now.
What's it?
It's called Tolan's, T-O-L-A-N-S.
Crabby. That's what it is.
Crabby.
Yep.
Very funny.
This is going to sound much more boring because it's in the B2B realm versus alien best friends. But we invested in a company called Cambio. We like vertical specific AI workflows. And so this happens to focus on the real estate space and commercial real estate in particular. They've created an AI native way of helping real estate managers manage their assets, you know, so trying to figure out when they're up for renovations, what should be replaced, what shouldn't be replaced, think about the CapEx, OpEx schedule, doing a whole bunch of integrated deep research alongside their budgets for those buildings to see how to optimize the NPV of any given project. It's pretty neat. That's kind of like within our book. Outside of our book, I mean, some of the super eccentric consumer stuff is what is, I think, probably captured our mind. But I still am kind of like a core. I used to be a programmer many years ago, so I still actually just love opening Replit and just coding something up from scratch. It's super fun.
I would also echo the B2B is not so boring. It's very interesting right now because the way that businesses are kind of working are all changing. So one recent investment that we did at Pair is a company called DealOps. It's in the custom price quoting space, CPQ, and the founders are out of Stripe, really deep domain knowledge. But pricing, as we all know, and everyone here is probably thinking about it, is changing fundamentally in terms of how businesses do it, how users think about it. And so they're kind of an AI native tool for revenue ops teams to think about how to price their product and get more revenue as these pricing models are changing from per seat to usage to outcome based. And so, yeah, it sounds boring, but there's a lot there on the B2B space. And I think generally I've been spending a lot of time in kind of vertical B2B applications as well as some of the more horizontal stuff. And with kids, it is so crazy to spend time with, I have a 6-year-old and an almost 4-year-old, and when we don't know the answer to something, they're like, just ask ChatGPT. And like this next generation is growing up in a very different world. So hopefully it's a positive world. So for those building apps, think about the children.
I'll talk about one. We haven't announced it, but we led this seed deal in a company in New York that's actually targeting older adults or the geriatric population. So it does have a human in the loop, but AI is embedded in every workflow. And we believe that's what's going to make it really scalable. So being lonely equals like smoking 17 cigarettes a day. The highest suicide rates are for older adults, and obviously they're the ones that cost the system the most. So we think that by having that companion with a human in the loop, it's a good opportunity.
That's a great one. I'm over 30, so I'm geriatric in AI. So
I'll sign you off, Lucas.
yeah, thank you. I've been spending You're welcome. I've been spending a lot of time in Replit the last few weeks. My wife and I are starting a hot sauce business on the side. We're both very passionate about hot sauce. So everyone has signed up for to be our first customers here, which is very good. But it's been incredible. I'm a philosophy major in college, and I have no business coding. And so being able to actually get a production app running in like no time at all has been just an incredible experience, and it's an amazing product that we are also investors. So have to plug it.
About that. Now I feel like we all need to plug for your hot sauce business from ChatGPT to hot sauce. But okay, so I want to maybe kick off with a question, since a lot of our listeners here are founders, right? So when you're looking at a company that is sitting in front of you, how do you evaluate a team, and how do you evaluate the product compared to the prior to, I want to say GPT, but maybe prior to Lovable era? I feel like it's been a few era since the GPT era. Maybe we could start with how do you evaluate the team, since like a lot of technical things could be done by AI. How do you evaluate the technical mode for different companies, and is a technical mode even important nowadays?
I'll take this one first. I talk to a lot of founders every day, and I think that with the advances in AI technology, the rising tide lifts all boats, so the technical threshold is now lower, barriers to entry are lower. And so I think what matters a lot now is less about the technical side, more about velocity, and more about know-how, as well as kind of primarily differentiation in some way. So whether that's through data, whether that's through subject matter expertise, these things will manifest eventually as data. So if you have subject matter expertise as a lawyer, that can manifest itself into various fine-tunes and workflows that you take and you put into a data format. So I think differentiated data matters enormously, as well as product itself. But when I'm looking at those founders, I think it used to be like a really good 10x software engineer was like a big needle mover. I think it still matters quite a bit, but when looking at the long-term durability of a company, I'm thinking more about differentiated data sets.
And one of the things I like to ask outright is why you, why this, and why now? And I think those top 1% founders that we're searching for have a really great answer to that, and some guttural drive that puts them on this planet to do that. And I think that touches on your point of what's the story that gives you some unfair advantage, given moats are wildly changing. And is there experience moat, data moat, and then velocity and speed moat of your team? But I think that's something that really stands out when I hear it.
Yeah, the thing is, like, software is becoming incredibly democratized. Like anybody, Lucas is building an app for selling hot sauce. 5 years ago, this wouldn't have been possible. So now, if you believe the software is getting easier and easier to build, yes, there's always going to be craftsmanship, and there's always going to be better software than others. But what has been drilled into me over the last few years is that storytelling is so important. When, as founders, you need to be master storytellers, because you're selling to employees, you're selling them on why this incredible engineer, why this incredible salesperson should come to you. You're storytelling to VCs, why should we back you versus the other 10 companies in the space that are doing something similar. And then ultimately you're selling storytelling to your customers, because why would a Fortune 500 company trust this little teeny tiny startup with their data and with their infrastructure. So storytelling, it's a hard thing to define what it is. It's like falling in love, but you know it when you see it. And you come out of a picture with a founder, you're like, holy shit, this person is incredible. And I would give them money even if I didn't know what they were doing, because they will figure it out.
I think one other point I would put, I think storytelling is a huge differentiator, although there's a lot more written online now about how to fundraise, so you can tell when someone's read all the articles and they hit all the things that you're looking for. But I actually think it's like great founder, building a big market, great product. I think you have to win on distribution. There's like 50 companies in every category now, so many more than there were before because it's so easy to build. And so I think about having some unfair advantage around distribution and how you're going to get your users. And I think founders who are thinking about that from day one or day zero are the ones who are going to win in their category because it's so noisy out there. A lot of the old channels for getting distribution are changing. And so I'm looking for founders who have thought about that. It's not an afterthought, it's a forethought. And then they have some plan of how they're going to make that kind of early traction.
Isn't there a very famous quote that says something like, first-time founders obsess over product, second-time founders obsess over distribution?
Yes, that was in our pitch deck for Market One.
And to that point in distribution, building brand has become super important, and building community not only in consumer but also in the enterprise. And we're seeing that super, super early. Adding to velocity, now we're seeing all of the 996 founders, 18-year-olds working 6 days a week in the office. They put that in the JD, and that's part of the distribution argument. To that note also, Lucas and I were talking about negative gross margins. When it comes to speed, a lot of founders are doing the trade-off between negative gross margins and just doing that land grab. And they think that gaining access to that incremental customer, which they can monetize later, is going to give them a huge advantage as the product matures, and that becomes ultimately the moat.
Lucas.
Yeah, I was going to say something. It's kind of hard to quantify, but one thing I think about is the founder of Open Evidence, Daniel Nadler. I think he's emblematic of a lot of what I think about in a great founder of this era. Again, another selfish plug, a Coach2 company, but he's built a platform that over half of physicians use on a monthly basis now in less than 12 months. That took its most recent comp, Doximity, 12 years to IPO to get the same amount of monthly active users, which is just insane. And I think what he's done particularly well is he's just built this incredible taste into the product that built trust with physicians really early on, and it was grounded in a lot of journal data, and it was marketed that way to physicians, such that there was just this incredible virality to the application. And I think a founder that he's been there before. He built a company called Kensho, which is one of the first, call it AI ML companies of the last generation that was acquired for $700 million, so not tiny by any stretch. So he's been there before, but he's done all this with 30 people. Mm-hmm. It's pretty incredible. And it's just the taste around the application that he's built is phenomenal, and the product sense that I thought was really strong with him.
I have so many questions there because obviously that's such a great example, but I feel like speaking of how many people are building a company at what kind of scale, I guess, is there any actual metrics on that, on how efficiently the startups should be going? By the way, a quick hint, we'll be covering some part of it from our first Smart AI 100 list, but is there any metrics that you guys are using to evaluate if a team is scaling efficiently?
Not a metric on the scaling piece, but I do think the 3 to 5 people is the new 12 to 15, just as far as rule of thumb.
I mean, for us, it's a little bit like what's old is new. I think in every wave, in every technology wave, you have sort of business model reinvention. You have companies that have margin, don't have margin. There's tons of debates around should something have 0% or 30% or negative 50% margin, all that stuff. I think the reality is if you're getting your product in the hands of consumers and you're serving them in an efficient way and you feel you can generate or extract margin over time, it'll just take lots of different shapes based on whether you're a consumer business that maybe you have to subsidize this and really hard early on, or you're a B2B software company where it's really expensive to sell. Maybe you need to have a higher gross margin to be able to couple that down the line. So I think it really depends, but I mean, what's old is new, right? Like people are looking at all kinds of different metrics, and top line seems to be what's mattering most today.
But I do think one of the things we all need to be really cautious of right now, at least on the, we're all so inquisitive about trying. And so I think we're seeing these flash out of the pan metrics that these early quick startups, they have traction. But is traction really going to be here to stay? And that's something that we debate wildly.
Yeah, I think it's really interesting, and it is a category of this era where I'm a growth investor. So when I do customer calls for companies in this era and talk to customers, oftentimes they'll say the products, even for the companies that are growing the fastest, are not very good. But to your point, right, like people are willing to try everything right now, which is amazing for people that are building. I think it's like the most exciting time I've ever seen to be building because people are willing to give things a shot. And so I think it is like coupling that willingness to try with building something that you can feel some durability around that is the most critical piece.
On the scaling point, I think there's this interesting game theory that hasn't played out yet where as companies scale faster, one observation is that the growth equity folks come in earlier, right? Whereas before, that would be like, oh, real proven product market fit, years of churn data, whatever it might be. And now it's like you hit a certain number of growth year over year, quarter over quarter, growth comes in early. And it feels like there's this impending playbook of raise a lot of money, but don't quite spend it, right? So keep the team at 30, keep the team at 3, not 15, and you just stockpile cash because you don't want to repeat 2021. But the way that, as I say, it's a game theory impending. Like the second one of those players in that category decides to not play that playbook and goes from 30 to 300 for distribution, marketing, brand, et cetera, new product proliferation, does it force everyone else to actually play the same game? And do you go to what's old is new, back to 2021, raise a lot, burn a lot? Like we're in this funny world where companies raise a lot, but they actually don't burn a lot. And it feels like this magical Goldilocks moment that I wonder if it's going to exist in 3 years from now, or if it evaporates 3 quarters from now. That's my
But I think there's also just a couple of different directions the companies can take. Yes, are you building the business which is going to be like highly profitable that could IPO? Or is it land grab where you can deal with negative gross margins with the hope that somebody picks you up for $1 billion, 12, 24 months in, which isn't bad, right? I think, as VCs, we've got to be okay. Yes, the second one sounds slightly cynical, but that's still a terrific outcome.
I wonder, so since I want to also talk about something light, since I feel like you guys are all here, what is a job that is going to be not here? And then what is a new job that will be created by AI?
Okay, I have a fun one. I don't have a job that's going away. I'm just going to stick to the positive because that's more fun. I was at a wedding this weekend, and for some reason I was at a table with like 15 developers. I don't know how I got sat at this table, but it was really fun. We were talking about all the different coding tools: Windsurf, Cursor, OpenAI, Anthropic, Cloud Code, etc. And one of the engineers was like, "I used to be an IC, and then I became a manager, and now I'm an IC again. But I'm an IC managing like 15 agents at all times." And so I think there's going to be this really interesting role in the future, which is like an agent manager. And I think it's going to exist. Yeah. I think it's going to exist across like all different kinds of categories. Like she's a developer, so she's doing that for engineering. But I think it'll be like a lawyer managing a team of law agents, maybe even a physician managing a team of physician agents. I think that's like going to be in almost every category. You have this just like incredible proliferation of these new roles.
Agreed. Actually, we have someone on the list later today. She's building an agent for agent. So the agent will be managing other agents.
The way I'll answer the question is more, I think AI is just giving us our humanity back. I wouldn't think about like jobs getting fully automated, but more like tasks within a job description that are getting automated. So like if you take the bullets, I think what's going to happen at first is just the most mundane, quote unquote, boring tasks are the first ones to go. And then, for example, an accountant will simply focus on getting new business, engaging the customers, and doing the more creative parts of the job that require more of that critical judgment. So I'd argue AI will give us a little bit more of our humanity back and focus on the higher leverage tasks.
I think the taste is going to matter. It's kind of to the humanity of like everything is starting to look pretty generic, I find, particularly like every company's website looks the same, and I think
Every LinkedIn post.
it's such a cesspool of slop. And so I think you can differentiate if you actually kind of use the tools but have your own kind of unique perspective on things. I also am just waiting for AI to figure out how to fold laundry. So I think like the household tasks, I actually think about that a lot. Like if your toilet is clogged, you're still gonna need a plumber. And so, but that plumber is probably, you're gonna book them through an agent, and they'll still have to come to your house. So
We do have a robotics company for
do
the
you?
folding
Alright.
laundry piece.
we had a robot company working in our office, and they were like, laundry's not high enough margin for us to work on. So I was like, oh man.
I think some of these jobs of the past may rhyme with jobs of the future. So like, we haven't made an investment in space, but one space that may be becoming less popular in the future is like the SEO space, search engine optimization, but it might be replaced by this generative engine optimization space. And one can debate actually either of those things, quite significantly, but the general concept is for the last 20 years, brands have been trying to optimize Google search results by backlinks and hyperlinks and all this kind of stuff. And as more and more results, even on Google, are AI-oriented, you're just seeing a decrease in people clicking on page 1, much less page 2, page 3, page 4. There's the same answer of, in generative AI, like if you're going to ChatGPT for an answer and you're asking what is the best no-code, software thing, how do you make sure it's Vercel versus Lovable versus Replit? And how do you make sure you get mentioned in that? That's like this GEO concept, and it's an emerging space, but I can imagine many professionals may be focused on that as search shifts towards generative answers from kind of link-based answers.
I've seen a lot of those companies emerging right now.
Yeah.
I think kind of a lot of the companies that are building automations and solutions in AI are taking away painful jobs like drudgery, tedium, like horrible things. Like I worked with a startup that was using our computer using agents to like look at 2 different government websites and move data from one to the other and hit enter and clear the cookie pop-up. It's like such painful, menial stuff that it's not inspiring work. And I think that it just kind of raises the bar on what's possible and like gives the folks that would be working on that stuff a better chance to grow and to do something more high level and use the highest and best use of their intellect and their superpowers. And so I think there's a lot of that happening right now across the market. I mean, you mentioned like folding laundry, like that's very painful. Right?
I look at it, this phase, I feel like AI is taking care of chores.
Yes.
Like, or those that would be categorized as chores.
Yeah, I agree.
But that leads me to think, like, I think one of the jobs that's going to get either minimized or woven out of our firms is like just the typical venture analyst. Like how much is really just the data layer, so not the sniffing, hunting, meeting people, but the data layer of that. And then that makes me think of what will be the new metric for investment banks and consulting firms, where so many people get their start there, and it really, is it to do the grunt work or is it to learn the rigor of doing grunt work? But really,
An open question up for lawyers, like now that a lot of the associate work for lawyers is kind of being automated away, how does a lawyer actually learn the skills needed to be a senior lawyer? And what does that schooling actually look like? I know people at Stanford are working on some of this, of like how do you train people when the low level where you kind of learn a lot by doing and having to do the grunt work. If you're not doing the grunt work, how do you learn?
Exactly. That's the other day I was at engineering, a hacker house, and like basically I think I was like asking people like, what is it like, do you fear of like AI take your job or something? And they're like, no, but I fear I'm gonna be dumber by keep using AI. I was like, wow, that's such a deep fear, because I fear that too every day. As a professional yapper, my biggest fear is like, Google's like, no, like LM, like I feel like I just constantly put stuff in, and then to listen to like a podcast that's by AI. Those are like some of my favorite apps to use, but also like my worst nightmare as well. Speaking of nightmares, let's talk about profit margins for AI.
Nice transition.
You promised.
Exactly. Sorry, guys. Okay. In our April summit, so we did a summit here back in April. Some people here are from our last summit as well. So one of the things that like some of the speaker mentioned, I just like couldn't like forget about is they mentioned that like, you know, nowadays like AI started charging based off performance, aka human salaries instead of per seats. What's your thought on that? That's it. That's a question, guys.
I can start. I think more than pricing based on outcomes, what we're seeing today is mostly pricing based on usage. But the pendulum is definitely swinging that way. I think an example, actually going back to legal, when you thought about 10 years ago, if you wanted to incorporate a company, a legal firm would charge you thousands of dollars. Then Stripe launched Stripe Atlas, where it's a fixed fee, $500, you incorporate a company. I think that dynamic will translate to higher or more complex transactional work too. For example, in law firms, it just takes time. And the reason is like, look, enterprises want predictability in what they're going to pay for. I think they're still assessing what's the actual impact of these tools in our P&L. So I do think it's a matter of time, but we're swinging in that direction.
Well, the problem with outcomes-based pricing has always been like how you define kind of quantitatively success. And I feel like we're getting there. Like every day the systems are getting smarter and can begin to say, actually, we believe this was a sales qualified lead, or we believe this was a fully contracted document, but it's not there yet. So which means, you know, maybe this is a job that isn't going away in the near term. There has to be a human in the loop to actually make the assessments on that. And that just means that the outcomes-based pricing is going to be too difficult to manage for now. But I do think it's kind of the ultimate end state for a lot of B2B software.
Yeah, I think it's really interesting because we are in this middle area right now. It's like a very fuzzy area where I was in a board meeting a few weeks ago. Companies like roughly 100 million of scale, it's growing very quickly, blah, 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 AI company, right? They charge based on seats still. But they know that the eventual end game is to charge based on units of work or credits or whatever you want. So they're just starting, they charge like $2K a year ASP per each thing that they do. And they're like, we may do this for the next 3 to 4 years. And it may just be a seat-based pricing that very slowly transitions over where we may add, you know, some credits based on unit of work, and then very slowly over time we drop the seats, we have a platform fee, and then we just charge based on credits or unit of work. But we're in this really interesting area. And then you also see in some places where you're already there. And that's like contact center software in my view, right? Where it's like the buyer for contact centers has always thought about it in terms of unit of work done. Right? They think about it like, okay, it costs me 50 cents per interaction. It's pure cost, 50 cents per interaction. That market is already moving there, right? It's like super fast. But I think that we're in this medium area in a lot of places where the seats are not quite going away yet.
But also smart entrepreneurs realize that in a lot of the companies they're selling into,
For sure.
there's going to be fewer per seat buyers. You know, they can't charge by the number of lawyers anymore because the number of lawyers is going to be like 35% of what was there.
Yeah. And it has a huge impact for incumbent software companies too, right? This is something we think a lot about. We also invest in the public markets, and it's like, what is CRM going to do in this world, right? If they're entirely based on seat pricing and they sit in this funny world and they're such a big ship, like how do they even move? Versus a new company may be able to just completely reinvent the model and is willing to take, you know, some big leaps on things. And it's one of the reasons why we actually think like a lot of the startups have a lot of advantages versus these big incumbents, whereas 2 years ago everyone was like, oh yeah, AI is just going to be taking my ServiceNow and Workday and CRM and call it a day. Like we actually think almost the complete opposite now.
100% this AI native attackers, they're for example selling the service and just fully tapping into services budgets with a totally different business model and skipping the tech procurement process so they don't have to compete with incumbents.
Next question. Startup versus big tech. Since I guess the big tech here is both, I guess, like the emerging big tech and the big tech. So since I feel like the big tech these days are moving really fast, what are something that startups should be building that will be actually the big tech will not poach them? Matt, this question is primarily for you.
I think the answer is like, well, first of all, there's a lot of new markets, and they're all massive markets, and it's not winner take all in these markets. But it kind of goes back to what I mentioned before, what I look for in a company is like, if you kind of take the thought of, imagine you're the LLM provider or the hyperscaler, like, what are you good at and what can you do to provide more value? And then assume those are the next steps that those companies are going to take. That's the areas that I wouldn't build. And then I would build in the white space that's left. And I think where that is like very differentiated, very like focused on having some sort of data that is like unique, specifically with regard to vertical expertise or subject matter expertise. I love the application layer, particularly because I believe that the model providers are incentivized to build more infrastructure internally or to acquire it. Like you said, you could snap up a couple like 3X companies or whatever with the new M&A wave that's probably coming.
Or the very expensive acquihire wave if you want to skirt regulatory.
Yes, some of these new...
Today?
Yes, thank you. And so I think the application layer is really exciting for this, and is building, like, there's loads of things where the last mile from, if AI is like electricity and it's reaching most of the masses with its general thing, like there's a lot of markets like over the hill, and like the companies that are building that like line and that last mile over the hill, like those are what I'm interested in, and that's where I think there's a lot of value.
Yeah, we think a lot about the companies that are building something with a data set that you guys and Anthropic and Google and Microsoft, et cetera, simply won't have access to. We made an investment really like 3 months ago in a radiology, AI for radiologists. And they partnered with the largest network of radiology clinics in the US. They have their data. This data isn't available anywhere else. It's not on the public web. It's not searchable. They have it, and they can build something which will be 100x better than what anybody else can do. That's kind of interesting because will this become a $100 billion company? Probably not. But does it have a better chance of becoming a $5 billion company than somebody that's going against OpenAI? Absolutely.
Think about that. Oh, sorry.
As I said, we also like these vertical specific type things, particularly in regulated industries, so a lot of what we do is in the healthcare space, a lot of it is in financial services, primarily for that reason, is that it's bespoke workflows, bespoke data sets, and it's a set of buyers that kind of know and trust each other, and that creates, they're not quite network effects, not in like the open evidence definition of network effects, but they do create like a selling network effect, right? And I think that's been so far a decent recipe.
I was just going to mention, I think the workflows actually matter quite a bit in enterprise because you can get 80% of the answer just going to ChatGPT, but that final 20% that is fine-tuned on your specific vertical with your specific use case where you're going to trust the answer and have less hallucinations, I think people are willing to pay for that, and we're seeing that over and over. There's a company I invested in before Pair called GCAI, and it's basically a co-pilot for general counsels, and they're just doing so well, even though it's kind of what used to be not cool, the wrapper around GPT, but like that wrapper actually with the workflows, with the data that is specific to that audience, GCs are willing to pay significant revenue for that, and you don't need to have built your own model yourself, just very, very good fine tuning, and the workflow. I think the workflow, most people aren't going to build it, and so we're seeing a lot of value created there.
Yeah, I totally agree that it comes down to owning that business logic, and that's the unlock. And maybe to put it a little bit into perspective, like world GDP is 110 trillion, services is 65 trillion, and then software as a service is 0.3 trillion. That's nothing. So I think it's really scary when you only look at OpenAI and what Microsoft and Google are doing, but if you zoom in a little bit from that and you see the potential of AI on creating new markets, expanding new markets, the pieces of the chessboard are not all taken today.
And I actually think that's why this is such a cool time to read a lot of history too, and even extrapolating from the analogy of electricity, like we're in the earliest innings of what electricity started to do, and then you think of some of those trickle-down effects of it changed the hours of a day that workers could work, and then you think of it enabled refrigeration, and then all of a sudden refrigeration meant individuals could have refrigerators in home, which changed the way food production, and which changed even Betty Crocker business model existed. So I just love reading those big parts of history and thinking what are these blocks that we're all walking through right now?
On that note, well, thank you guys so much for joining this panel. It was such an insightful panel. Thank you all.